Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you an example of a fantastic morning gap trade from this morning. You can see it on the screen, PTLA. Before I do that and explain the details, I just want to emphasize this is about day trading. More specifically, it's about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course where traders learn everything they need to know how to trade the gaps successfully. What I mean by this is, in the morning, if a stock is gapping higher or lower at the open, it creates an opportunity. And the opportunity for traders is when they can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In my course, I teach traders everything they need to know in order to trade the gap successfully. Which stocks does it work the best with? What type of volume are we looking for? How much of a gap higher or lower are we looking for at a minimum? And most importantly, how do you calculate the specific price where these stocks, where if they're drawn to, will have that price reaction in the other direction? Everything traders need to know in order to trade these gaps successfully is found in the course at LazyGapTrader.com. Now, the other thing I do is give traders an opportunity to get my gap trade sent to them first thing in the morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market's even opened for business. Here's a copy of the email that went out this morning. As you can see, it arrived at 9 o'clock a.m. and that's Eastern Standard Time. Now this morning, there were only 4 gap trades on the board, and this is the holiday season. It's in between Christmas and New Year's. The trading is very light, and we don't expect many stocks to be gapping higher or lower at the open before New Year's holiday. However, once we get into January, earnings season starts, and the trades will come fast and furious. Earnings season produces volatility. Volatility creates opportunity. So out of the 4 opportunities we did have this morning, 1 hit the specific price level that we calculated. That was PTLA. If a stock does not hit the level that we calculate, that traders are taught how to calculate in my course, then we don't want the trade. It's a no trade. We only want the highest probability trades we can find. So on PTLA, I say gap lower. Support levels are $50.29, and then I gave 2 secondary levels, $48.92 and $46.33. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. We'll talk more about that when we go to the chart and review PTLA. Here we're on a 5-minute chart, and you can see here that the stock closed the prior trading day, which was Friday the 22nd of December. It closed at $54.84. The stock was gapping lower at the open, getting a pretty good haircut, but that's what we want to see. It creates the opportunity for traders. So you'll remember from the morning email, the first level identified was $50.29. As you can see, in the first candle of the day, really right out of the gate, the stock came into that level at $50.29 and hit a rocket ship higher. And you can see within just minutes, the stock was already at a high of $51.95. That represents a total possible gain of over $1.60 a share in just a couple of minutes of trading. Now, whether some traders took 40 cents, 50 cents, 75 cents, in my course, I teach a specific strategy where I teach traders how to take some of the profit along the way and then turn trades like this into a risk-free, emotionless trade, allowing us to get as much of the gain as possible before the stock takes a U-turn and heads back in the other direction. This was a quick, easy, stress-free trade. These are the ones we want. These are the ones we like. A lot of traders only can trade in the morning session. Most of these trades occur within the first 60, max 90 minutes of the trading day. So traders that take a trade like this, some of them are done for the day. They go on about their business. Folks, we do this each and every day, and during earnings season, we get whether it's 1, 2, 4, 5 trades trades each and every day, because with earnings, with news events, comes volatility. When stocks are moving, it creates opportunity for day traders. That's exactly what we want. That's exactly what we need. If you want to learn everything there is to know about trading the gaps successfully, how do you calculate these specific price levels, $50.29? Where did that price level come from? It's all taught in my course at lazygaptrader.com. And one more thing. Once traders understand how to calculate these levels and why stocks will react off these specific price levels, it gives them a different confidence level when taking these trades. They understand the why behind the trade, and therefore they understand and have a certain expectation of what these stocks are supposed to do at certain price levels. And once you take the course at Lazy Gap Trader, that all becomes very, very clear. It becomes crystal clear why these stocks are attracted to and have price reactions from these specific price levels. If you want to learn everything there is to know about trading the gaps successfully, come over to Lazy Gap Trader, check out the course. This is a strategy that you can use each and every day for the remainder of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.